Hey traders, Raghee here, and we're going to go over the day trade that we did in the S&P this morning in the futures room. And I want to talk about the S&P because it brings up a really important point that I hope will help you next time you're trading the S&P. It's something that a lot of people talk about, which is the Dow and the NASDAQ are really in a tug of war for where the S&P is going to go. Or put another way, the S&P is not the captain of its own ship. So this morning, just to give you an idea, and I'm sure some of you would have seen it, the Dow is moving lower sharply and the NASDAQ was moving higher. Well, when that's happening and the S&P pulls back, it is actually a really nice buy setup because sometimes the NQ in its move higher is not giving us a chance for a pullback. We don't necessarily want to get into the Dow because it's not a relative outperformer, and that makes a really interesting scenario for S&P buys. So again, Dow weaker, NAS stronger, S&P on pullbacks is actually a pretty darn good trade. So what we did, knowing a couple things, I'm going to point out a few things about volatility and the clearing range and volume to show you the details of this setup. So let's start off with the volatility because this is something we monitor actively between 9:30 and 10. Now I use historical volatility ranges. I'm going to show you that right now. All right, here you go. I'm going to use historical volatility ranges for the 9 to 10 o'clock hour. The low end is just above 12. The upper end is just above 22. This is where the S&P will normally move in terms of a point range 68% of the time. Now, today's range in the S&P between 9:30 and 10 was a lowly 8 3/4 points. Most of the volatility between the 9 and 10 o'clock hour is going to be put in, of course, after the bell rings until the top of the hour. This was a far cry from what I would minimally want, which is about 12 points, right? So what I know is the markets are capable of moving about 3 points lower than the low that we put in. That means that placing a stop loss is far more difficult because of the 3 points that we could put in. So what we do is we look for opportunities to buy. Oh, that's this low here. So 3 points lower than this low here. So what we do is we buy the SPY. You can use the SPX as well. Either one is fine. Okay. As the market makes a V-score low, knowing that this may not be the lower low, that there's another 3 points we could put in. And actually, if you take a look, that's pretty darn accurate, isn't it? So at that point, we know that the market could, again, revert to more of a normal price movement range after 10 o'clock. So that's exactly what we ended up doing. Because we did not put a normal range in between 9:30 and 10 or 9 to 10, the market put in those extra 3 points after 10. Had I used, like many people do, the clearing range low, that area as my stop loss and not acknowledged this small range, this is where most traders get stopped out. But remember, we don't know how much lower low could be because 12 just gets us to the lower end of this range. Almost 17, 18 is where we could be. That's another 5 points. So this is how we manage it. We change the asset class. Yes, futures traders can absolutely jump into the SPY or the SPX and sit through this because the volatility and the point movement range is going to be a little bit more affordable for most traders. Now, for you, if you're thinking, Rag, another 3, another 5 points, I've got no problem with that 8-point move, and I'm fine with taking the ES. Fantastic, but this information is still going to be really helpful to you placing your stop, right? So if you can tolerate this as risk, fantastic. But a lot of traders can't. So what they'll do is they'll put in the SPY. And that's exactly what we did this morning. So I knew that most of the group could participate in the move. And that's exactly what we saw. Move up to the value area high. Actually, at the time, it was 1481. And that's a nice little move on the morning, getting out before Jerome Powell starts speaking. Confirmation for the trade, volume, standard deviation low. Volatility has us change to SPY, or at least calibrate to a possible 12 to 17-point range as compared to what we saw during the open at under 9. And we look long and long only because, gang, we don't want to short in front of kaPowell, right? Generally speaking, we want to be long in front of the event and then maybe flat at the event. And that's really going to give you that bullish bias in front of FOMC events like Jerome Powell, or as we endearingly call him, kaPowell. I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me